Investing is the act of sacrificing bananas today so that future bananas grow, without asking permission. Why does a monkey choose to wait, water a tree, and resist eating the banana in his hand right now? Because every jungle that ever survived learned that patience quietly decides who eats tomorrow, and who only remembers yesterday. The monkey did not wake up one morning with a spreadsheet, a calculator, or a motivational quote taped to a cave wall. He woke up hungry, holding one banana, staring at the empty dirt in front of him, and somewhere between hunger and hope, he imagined something growing there that did not yet exist. He pushed the banana peel into the soil, pressed leaves over it, stepped back, and did the most unnatural thing a monkey can do. He waited. Days passed and nothing happened. Weeks passed and nothing happened. Other monkeys laughed because laughter is cheap when you are eating today, and doubt is loud when nothing is visible. The monkey kept watering, not because he saw growth, but because he trusted the logic of time. And time is the only force in the jungle that does not care about opinions. This is where investing actually begins, not with markets or numbers, but with delayed gratification disguised as stupidity. The jungle rewards speed in fights, but rewards patience in survival, and most monkeys confuse the two because both feel like urgency. The monkey planting a banana tree looks weak today, but hunger has never been a good judge of the future. Years pass quietly when nothing changes on the surface, but underground roots spread without permission, without applause, without announcements. And this is where most monkeys fail, because the jungle teaches them to only believe what they can see. Leaves in the bank do not grow roots. They sit stacked, clean, safe, and emotionally comforting. But comfort has never multiplied bananas. The monkey government learned this before the monkeys did, which is why the monkey bank exists in the first place. When monkeys place leaves into the bank, they believe the leaves are sleeping. But leaves do not sleep. They travel. They are lent, invested, multiplied, risked, sometimes burned, sometimes transformed into machines, roads, or weapons, depending on which monkeys are in charge that season. The monkey who saves believes stability comes from stillness, but the monkey who invests understands stability comes from controlled movement. Inflation enters the jungle quietly like termites, eating the value of stored leaves one tiny bite at a time, never dramatic enough to notice today, always catastrophic when remembered decades later. Bananas become more expensive not because bananas changed, but because leaves became less meaningful. This is why investing feels optional only to those who do not measure time correctly. When bananas cost more every year, standing still is not neutral, it is moving backward politely. The monkey who keeps leaves under a rock believes he is avoiding risk, but risk has already chosen him, it just wears the costume of time. Some monkeys try to outsmart the jungle by chasing fast-growing banana trees, jumping from branch to branch, believing speed equals intelligence. They watch shadows on the market floor, listen to rumors carried by parrots, and call it research. Sometimes they win, often they fall, and always they feel tired because active investing is not about intelligence, it is about emotional endurance. Other monkeys water the same tree every week without asking questions, ignoring noise, ignoring drama, ignoring the screams of the jungle when storms come. They are called boring until suddenly, then are called lucky, which is what impatient monkeys call patience when it finally works. Passive investing is not passive behavior, it is active discipline disguised as laziness. The banana tree does not care whether the monkey believes in it today, it grows according to math, weather, and time is undefeated in every jungle that ever collapsed. Index forest exists because betting on one tree is romantic, but betting on the forest is rational, and rationality is rarely exciting enough to trend. The monkey who diversifies does not trust himself to predict which tree survives storms, fires, or disease, so he spreads his leaves across many, accepting average outcomes in exchange for survival. This is not cowardice, this is evolutionary intelligence. Because the jungle punishes overconfidence far more than mediocrity. Risk and reward are not opposites, they are siblings. And every banana gain carries the ghost of a banana that could have been lost. High-reward investments scream loudly, promising fast growth, viral bananas, overnight forests. But they demand something in return, usually emotional stability, sleep, or sanity. Low-risk investments whisper quietly, boringly, but they compound without needing attention, which is why they feel invisible. The monkey government tells stories about safety, stability, and protection. But its power comes from controlling leaves, not bananas. Bananas feed monkeys, leaves control monkeys. And every financial system ever built understood that distinction clearly. Whoever prints leaves decides how hunger is distributed over time. This is why investing is not just about money, it is about power delayed, choice postponed, and freedom negotiated with the future. The monkey who invests is not chasing wealth, he is buying optionality, the ability to say no later, the ability to eat without fear when others panic. This is uncomfortable knowledge because it implies responsibility, and responsibility is heavier than hunger. The jungle does not collapse suddenly, it erodes slowly through policies, incentives, and stories that encourage consumption today over resilience tomorrow. Investing is resistance disguised as routine, rebellion disguised as patience, and discipline disguised as boredom. It is not exciting because survival rarely is. When the monkey looks back after 40 years and sees a forest where there was dirt, it feels magical only because the suffering happened quietly. The million banana trees did not appear overnight, they appeared one watering at a time, ignored, mocked, doubted, and finally accepted as obvious by monkeys who never believed in them early enough. This is what investing represents beneath the joke, beneath the banana, beneath the laughter. It is a system that rewards those who understand time better than emotion and punishes those who confuse urgency with importance. The jungle has always worked this way, and it always will, because biology and economics share the same enemy, impatience. Saving is what a monkey does when he is afraid to lose what he already has. Investing is what a monkey does when he understands that keeping still is already a loss. The jungle teaches fear very well, because every sound might be danger, every shadow might be hunger, and every empty branch reminds the monkey that safety never lasts long without effort. The monkey bank was not invented to protect leaves, it was invented to control behavior. When monkeys place their leaves inside stone buildings guarded by symbols and uniforms, they feel relief because relief is cheaper than understanding. They believe the leaves are resting, but the leaves are working. Moving through tunnels the monkey never sees, building systems the monkey never voted for. This is where the jungle quietly splits into two kinds of monkeys: those who think money is a thing, and those who realize money is a process. The first group counts leaves, the second group counts flows. One feels rich today, the other becomes rich without noticing the moment it happens. Inflation does not announce itself with drums, it sneaks in like humidity, slowly ruining everything stored without movement. When bananas cost more leaves each year, the monkey feels confused, angry, and betrayed, even though no one stole anything directly. Value evaporated politely, legally, and unpredictably, which makes it more dangerous than theft. The monkey government explains inflation with complex words because complexity discourages rebellion. But the truth is brutally simple. When more leaves are created than banana trees grow, each leaf matters less. This is not ideology, this is arithmetic, and arithmetic does not care whether the monkey feels treated fairly. Some monkeys try to escape this by hoarding physical things: gold bananas, lamb branches, oil fruits buried under soil, objects that cannot be printed by decree. These monkeys understand something instinctively. Real value resists duplication. Anything that can be endlessly copied will eventually be worth less because abundance kills urgency. Other monkeys chase newer, shinier assets, digital bananas with complicated names, promising freedom from governments and banks. Some of these promises are sincere, some are scams wearing revolutionary costumes. The jungle loves new stories because old stories feel boring even when they work. Innovation attracts attention, attention attracts money, money attracts predators. This is why risk never disappears, it only changes costumes. The monkey who invests must accept uncertainty as the entry fee. There is no banana tree that grows without weather, insects, disease, or storms. The fantasy of guaranteed returns is sold to monkeys who fear responsibility more than loss. Active investing feeds the monkey's ego. It tells him he is smart, informed, early. He watches charts like campfire flames, hypnotized by patterns that sometimes mean something and sometimes mean nothing. When he wins, he credits intelligence. When he loses, he blames manipulation, timing, or other monkeys. Passive investing starves the ego, but feeds the future. It demands consistency instead of brilliance, repetition instead of genius. It is emotionally unsatisfying in the short term, which is why it works in the long term. The jungle rewards behaviors that most monkeys cannot tolerate. Dollar cost averaging is not a strategy, it is emotional damage control. By investing regularly regardless of market mood, the monkey removes himself from decision paralysis. He accepts that he cannot time the jungle, only survive it. This humility is often mistaken for ignorance by louder monkeys. Markets crash because fear spreads faster than facts. When bananas fall in price, monkeys scream, sell, and run, even though nothing fundamental changed except sentiment. The monkey who understands cycles does not celebrate crashes, but he does not fear them either. He recognizes storms as part of growth, not proof of failure. Every historical market collapse punished leverage and rewarded patience. Empires rose and fell, currencies died, systems reset, but diversified ownership of productive assets quietly rebuilt wealth again and again. History does not repeat perfectly, but it rhymes aggressively for those who listen. The monkey who invests consistently becomes dangerous to control. He depends less on wages, less on favors, less on promises. This is why financial education is rarely emphasized loudly. An informed monkey is harder to scare, harder to distract, and harder to manipulate with short-term rewards. This is also why investing is framed as complicated, risky, and exclusive. Complexity creates dependence on experts, and dependence creates power. But beneath every complex financial product lies the same primitive logic. Delay consumption, accept uncertainty, let time do the heavy lifting. The jungle does not reward effort equally, it rewards positioning. A monkey climbing the wrong tree works just as hard as one climbing the right tree, but ends up hungry anyway. Investing is choosing which trees deserve decades of your watering, not which fruit looks tastiest today. This is uncomfortable because it forces the monkey to confront trade-offs. Every leaf invested is a banana not eaten. Every choice excludes another. Freedom is not infinite options, it is discipline limitation. The monkey who understands this stops chasing everything and starts building something. The most common beginner mistake is not lack of knowledge, it is emotional inconsistency. Monkeys invest when things feel good and stop when things feel bad, which is mathematically inverted survival. Markets reward those who do the opposite of their instincts, which feels unnatural until it works. Time in the market beats timing in the market because biology is flawed. The monkey brain evolved to react, not to wait. Investing demands overriding instincts developed for immediate danger, which is why it feels psychologically exhausting at first. Over time, discipline replaces anxiety. Eventually, the monkey stops checking prices daily. Not because he is careless, but because he understands that forests do not grow faster when watched. This detachment is not apathy, it is trust in process. The jungle has always respected process more than intention. When retirement finally arrives, it does not feel dramatic. The monkey does not wake up rich one morning. He simply notices that fear is gone. Bills no longer dictate decisions. Time feels slower. Choices expand quietly. This is the true return on investment, not numbers on leaves, but reduced dependency. Investing is not about predicting the future. It is about preparing for many futures at once. It is not about becoming exceptional. It is about becoming resilient. The monkey who understands this stops asking how fast he can get rich and starts asking how long he can remain free. This is the part rarely shown in flashy stories. Wealth is boring once it is stable. Excitement belongs to insecurity. Peace belongs to preparation. The jungle glorifies chaos because chaos distracts from structure, and structure quietly shifts power away from noise. By the time the monkey realizes this, years have already passed, but time passes anyway. The only real choice was whether those years built something invisible or nothing at all. The jungle never pauses to wait for understanding. It only responds to action repeated long enough.